Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, finance presenter and columnist for the ABC.
And I'm James Thomson, senior Chanticleer columnist at the Australian Financial Review.
And we are
The Money Café.
Yes, good day, James. Good to be back.
Yeah, it is good to be back in the cafe. It feels like a while. I don't know why.
No, well, I had a week off.
Oh, right.
You know.
Yep. We missed you.
Yes. Now, can we just deal with Macquarie to begin with, because this is the latest news, and they got pulled over by the ASIC.
Yes, again, this is the latest episode, which is around the reporting of short sales. So short selling's when you're betting on a stock to go down. Macquarie helps clients do that, but they have to report all that data to the ASX and other market regulators, including ASIC. And ASIC alleges that they've been falling down on their reporting.
They've been forgetting to report it.
No, not forgetting, just there's some gaps in their reporting, and there has been gaps over a decade, which is the issue. And Joe Longo, who's the chairman of ASIC, just lost patience, I think is the best way to say it. He's had a number of issues with Macquarie. He says, we were reassured in 2015, 2019, 2020 and 2023 that all this was sorted. It wasn't sorted.
But did Macquarie self-report this?
They self-reported it in 2022.
But ASIC picked it up?
ASIC says we've been talking to them about this for a lot longer than that.
Well, so if ASIC talked to them before 2022,
yes,
then 2022 can't have been a self-reporting
because
they were told by ASIC.
I think what we've got is
what's going on.
We've got an issue. There's an issue here. ASIC and Macquarie are talking. Macquarie keeps investigating, finds out that the issue is a bit deeper and more complex than they thought in their report. Look, we should emphasise this isn't about client money being lost. This isn't like other scandals where other people's money is at risk. But Joe Longo says, don't worry about that. This is about market integrity. Macquarie's a big ugly institution, and they should be able to do this stuff.
Well, I thought your point this morning in the Chanticleer column was interesting, because you say there's a huge gap between what Macquarie thinks about the seriousness of it and what ASIC thinks.
Yeah.
And Macquarie is saying, oh, look, it's just a little thing and we're on top of it, don't worry about it. ASIC, Joe Longo says, nah, this is bad.
Well, and for Longo, it goes to their attitude. Macquarie thinks its compliance is good, and Joe Longo is saying it's not as good as you think, guys. And he's saying, that's complacency and hubris. It's not that they're not taking it seriously. It's just that they think they think they are better than they actually are.
It's hard to equate the words hubris with Shamara
Wickramanayake. Yeah, that's very true.
She doesn't seem like a hubristic human being.
Not at all. One of the more humble and sort of grounded, down-to-earth people. But I think it's, the institution's bigger than one person, I would say. And Macquarie, the Macquarie model is taking risk. It's about risk. Calculated, careful risk-taking. And I think, that sort of attitude means that they see things in a different way. Look, they look at this and they say, look, it's not that big a deal. But for Joe Longo, he's looking at the integrity of the market and saying, no, trust me, it's a big deal. And to me, I think Macquarie's problem is that the regulator is now, he's sick of it. The sort of enhanced monitoring of this company is not going to end anytime soon, and we've seen this with other banks. They keep picking away unless you fix it. Unless the script changes, they keep picking away, and it ends badly. So we'll see what happens.
Anyway, there's plenty going on in the markets, isn't there? With Trump.
Oh well, yeah. How's this been? Is it who backed down, Alan? Did Trump back down or did China back down?
No, he backed down, didn't he?
Yeah,
it was a complete capitulation.
Well,
I would have thought. But the thing is, what he's done is reduce the tariff on China from 145% to 30%.
Yes,
for 90 days.
Yeah,
right.
Yeah.
Well, 30% is still a big tariff.
It is, for sure. I mean, it's not a trade embargo though.
No, 145%, as you say, is an embargo.
Yeah,
effectively.
Yeah.
30% probably won't raise prices enough to basically remove the trade.
Yeah. I mean, I think there's so many interesting things about this, like the way it was negotiated, the way markets have just instantly assumed that this is done. This isn't no one's thinking. The markets are telling us this isn't a ceasefire or a pause. The markets are telling us this is over. That this has been sorted out, but it clearly hasn't.
No, but the idea that it's over comes from the fact or the appearance that Scott Bessent, the Treasury Secretary, is in control.
Yes.
And I've read stuff saying, well, finally the adults are in the room.
Yeah.
And they're running things.
Yeah.
I don't know. I mean, Trump's in, the Middle East picking up his plane. And, I mean...
I think there's lots of twists and turns to this. Trump will completely backflip and attack China. China will probably completely backflip and attack Trump. It will take a while for this to all get resolved, I reckon. There's a lot of hero worship in the market of Scott Bessent, which I find, you keep hearing that phrase, exactly as you said, he's the adult in the room. I don't reckon any adult joins the Trump circus.
No.
So I have my reservations, and the messaging out of Bessent has changed. It backflips.
And also, the other thing is, and we weren't going to talk about Ray Dalio, but just to mention, he's got a piece this week on LinkedIn, as he often does.
Yeah.
This is the bloke who started Bridgewater. He's a billionaire, and he loves to air his opinions.
Like an amateur historian, he's turned himself into. It's very interesting.
But he's done this piece this week saying, "Don't worry too much about Trump. The world's buggered anyway."
Yeah, basically.
And he's listed 5 things that are wrong. But I think the broad point is that there are problems in the world.
Yeah.
Like that are not to do with Trump.
Yes.
And so basically I'd mention 2 of them. One of them is. Dalio's number one point is the amount of debt in the world.
Yeah.
Global debt just went above $300 trillion.
324, I believe, in US dollars. So it's probably 400.
It gets to the point where you think, well, does this matter? I mean, I don't know. But the other point is that the American market in particular is very expensive.
Yeah.
It's high.
Yeah. Yeah.
Valuation wise.
Yeah. Well,
still.
And we're back to that.
And we're back to where
spot.
It was. So,
The thing I would urge listeners to keep looking at, Alan, is the bond yield, the 10-year bond yield. Now, equity soared, and you would have thought, well, the bond yield would have come down. It hasn't moved. In fact, it's gone up. It's touching 4.5% on Thursday morning our time. The 30-year bond yield is hovering around 5%. What does that tell you? Bond investors are still worried about the size of the US debt and their ability to repay it.
Yes.
And how many bonds they're going to have to issue to keep sustaining it.
It's either $7 or $9 trillion this year.
That's a lot of bonds to eat. Someone's going to eat them. And if you're going to eat them, you want more compensation. If that 10-year yield gets to 5%, markets will sell off again. That is that's not impossible.
Or it looks like it'll get to 5%.
Yeah,
Markets tend not to wait until something happens. True. They go before.
So, I mean, I think you just got to look at that. The thing about the backtrack on tariffs, the tariffs were supposed to pay for the tax cut. And now, so if you're a bond investor and you're thinking, all right, well, I didn't love the tariffs, but at least they were going to help bring down the US government debt. Well, now that's not going to happen. You're going to get less money from the tariffs, and you're going to get this ginormous tax cut coming through.
The tariffs were supposed to not only pay for the tax cut, but also to bring manufacturing back to America.
Yeah.
We can't do both.
No,
you can't have no imports and also lots of money from tariffs.
Well, it's not going to do either now. So I don't know.
Before we go to questions, we just talk about the Liberal Party.
Yeah.
Politics in general.
Sure.
Briefly. Mm-hmm. I reckon the problem with Susan Lee has is the question for Susan Lee is can she come up with an electable climate change policy while keeping the coalition together?
Yep.
And I don't think they can.
Yeah.
I think that it's not possible for the coalition to stay together while also having a climate change policy that will get them elected.
It's a really good point. Yeah, I hadn't thought of it like that, but it is a sort of it is a pinch point for them, isn't it? Yeah.
Well, it's been the pinch point.
Yeah.
You know, I mean, I was just looking last night at remember that picture of them, of the members of the Liberal Party? There was Kelly O'Dwyer, Christopher Pyne and Greg Hunt hugging each other on the floor of Parliament when they repealed Julia Gillard's climate, what was it called? Clean Energy Act, it was called. Yeah. And they repealed it on July the 17th, 2014.
Right.
And they all had a group hug on the floor of Parliament and loved each other. And that was a disaster. But the point is, I suppose, that they were all Liberals anyway.
Yeah. Yeah, it's a good point. I mean, I think she's got some real... I mean, obviously, the party's wildly unstable at the moment, so that's going to be an issue in itself. But there's so many policy... You know, if you think... I mean, the nuclear policy is obviously connected to that climate change issue, but things that they've been whacking away at for so long, you know, the attacks on superannuation, like, I don't think anyone wants to hear that stuff anymore. I just think it's failed so miserably to resonate with anyone other than... the sort of own echo chamber. Like, what do they do about that? What's their signature economic policy? I mean, they did have some good policies around, you know, I think there's $5 billion for housing-related infrastructure that they took to the election. That was a good policy. I've said this before. I just wonder if you need a complete change in attitude. Complete, like, you know, we love contrarian investors, the people who go against the tide. Isn't the way to go against the tide right now for Susan Ley to say, we've got to get this country moving again. We're going to work with the government on issues like housing and productivity. And yeah, there'll be spots where we disagree, and we'll tell you and make that very clear. But actually our tactic is going to be to try and get some stuff done.
I couldn't agree more. I think you're right.
That would be a wildly different approach, and I think some people go, "Hey, that sounds pretty good."
Well, most of the Hawke and Keating reforms of the 80s were supported by the coalition in the Senate.
Yeah,
and they didn't have to go to the minor parties most of the time.
But I guess that my suggestion, Ley would be eaten alive from the inside of the party, wouldn't she? So.
But that's right. But the main problem I would suggest is the Nationals.
Yeah.
You know.
But I think it's just, you know, that would be the way to sort of win people back. Say, you know, we're on Team Australia. We're on the blue side of it, but let's do something in the next 3 years. And then when we get to the election, we will have some points of difference, and we'll make it really clear to you, and we'll fight for those principles. But a lot of stuff, like, yeah, of course, housing, we need to do stuff on housing. I don't know. I'm probably being very sort of idealistic about that, and it wouldn't work. But it's just the contrarian in me.
I think you're right. That's right. But yeah, I mean, at the moment they're constantly trying to come up with policies that are different.
Yeah, no, they're trying to say no all the time.
They're trying to say no, but also, you know, what can we do on housing that's different? Well, you know, there's only a few things you can do on housing. It's not actually possible to come up with different things.
Yeah, but I mean, just housing is a great example. If you took that strategy, you could say, that's a good idea. Labor's got a good idea, and we've got this good idea on the infrastructure. Maybe we can incorporate that, and then you can go to the electorate next time and say, look, we supported this, but we also got our idea through. See, we've got good ideas. Anyway.
Just quickly, RBA meeting next week. Did you notice that Sally Auld at NAB, new chief economist says it'll be a 50 basis points next week, 0.5%.
Really? I hadn't seen that, no.
Yeah. I interviewed her yesterday for, you know, Intelligent Investor.
Right.
50
basis points. Do you agree?
No, but I think it's interesting that she... I mean, the market odds of a 50 basis point cut next week back to zero.
Yeah.
They were reasonably high, like 20 or 30% for a while. But now it's zero. But the odds of a 25 basis point cut are 100%.
Right, yeah. Well, look, I can't see the emergency that would equate an emergency cut, particularly after...
Well, her point is that
the deal.
Her point is that they're heading for 3.1% end, or you know, by the end of the year, of a cash rate. That's another 3 or 4 cuts, whatever. But she reckons, well, if you know you're heading for 3.1%, why not just get there?
Okay.
Or you know, not muck around.
Maybe we need that, you know, 35 basis point cut to even things back to, you know, get things back to the...
I think that's definitely a possibility. I do.
Yeah, round numbers.
Okay. Before we go to questions, here's a quick word from our sponsor.
What if your next investment could beat the ASX 200? The Intelligent Investor Australian Equity Growth Fund is built to do just that, and it's backed by a team with a 25-year research track record. This actively managed ETF gives you access to a no-holds-barred portfolio of the team's best ideas. And from the new financial year, the fund will expand its mandate to include up to 30% in global shares, allowing the team to invest in global businesses they believe offer better value than their Australian counterparts. For a limited time, you can invest in the fund with zero brokerage fees directly with Intelligent Investor. Learn more at offer.intelligentinvestor.com.au/IIGF.
Okay, before we get to questions, I just should say that we had an offer during the week from one Daniel Perslow, who's an independent financial planner in Perth, from Bruning Partners in West Leaderville, to help us with our questions, because he thought we got a few things wrong. Yeah. He says, listen, if you want to run this stuff past me, that's a bit technical, do so. And so we did.
Yeah.
And Daniel's helped us out, and including in the first question, which is about the downsizer, what's it called?
Rules, yeah.
Downsizer contribution, which allows you, if you downsize, as I just did, you get to put 300,000 per person into super.
Right.
So my wife and I put 600,000 into super.
Boom.
Because that's 300,000 each.
Okay.
That's anyway. So Roger says, I'm considering moving out of the inner city, selling the house, moving to the outer suburb in order to have more house space and extend family now that the retirement has finally arrived. Can you clarify the downsizer rules, please? Is there any rule that says the new house cannot be physically larger or more expensive than the one that was sold? There doesn't appear to be any rule about this. And you're right, Roger, there is no rule about this. You don't have to get to a smaller, cheaper house. You can buy a better house and put money from somewhere else into super, which seems a bit crazy to me.
Wow.
This is Daniel says, there's no actual requirement that the size of the house to block is smaller than the initial home, and no requirement that the house of the new home is less priced than the existing home, and you can actually buy a more expensive home and contribute other surplus funds into super if you've got them. I can't believe this, honestly.
This is the loosest downsizer contribution I've ever heard of.
I know.
Wow.
Yeah.
Yeah.
So I wouldn't have. So if Daniel hadn't helped us with this, I wouldn't have believed it.
It's a great strategy, Daniel says, for people over 75 who otherwise couldn't contribute to super. So it's really about the age, your age, rather than the size of the property.
All you've got to do is move house.
Yeah. Yeah. Interesting. There you go. All right. John says Australia's obsession with residential property investments contributed to a few problems, most notably low GDP per capita and counterintuitively a housing affordability crisis. When I was a kid in the 70s, everyone seemed to have a place to live in. Surely there is a solution beyond the window dressing trotted out by both parties during the election. Where did we go wrong and what can we do to fix things? Wow. Big question there. Do you think the new majority government has the chutzpah to make any effective changes that will make owning a home an achievable goal for most Australians?
Short answer, no. Well, it's too hard. I mean, I think they can't really do it. Yeah. Go on. What?
I guess John's question sort of hits on the point that this has been a a problem that's built up over a long period of time, and it's just going to take a long period of time to fix, isn't it?
Yeah, but you have to. That means you have to focus on it for a long period of time.
Yeah,
and we can't in Australia. Politicians can't focus on anything for very long.
And they won't. I don't know about that because I think the electorate will stay focused on this for decades.
Yeah, but the electorate actually owns houses.
Yeah.
So I don't think
the electorate's kids.
True, I know, but I don't think there's much of a mandate. I don't think there's much of a constituency for cheaper houses, really. For what? See, in order to achieve cheaper houses over a long period of time, you have to have an oversupply of houses. Basically, the problem is demand and supply.
Yep.
We have too much demand, not enough supply.
Yep.
The government focuses entirely on supply right now. They're not doing anything about demand. They're talking about reducing immigration, but they're not.
Yes.
And they're not even talking about changing the tax rules, negative gearing and capital gains tax. So it's all about supply. And the fundamental problem is that what the governments, both sides, really are talking about, well, we're going to help the private sector. It's all about private sector building houses.
Yeah.
The private sector requires a return of 9 to 10%.
Yep.
Right? And the whole problem is that...
That's difficult to achieve.
No. This is the problem, is that residential housing has provided a 9% return over 25 years. That's the problem.
Yeah.
And it has to stop providing a proper return. So residential housing has to stop being a decent investment. Like, it has to be a bad investment for a while.
Yeah.
In order so there's a fundamental disconnect between what the private sector requires and what's needed for affordable housing, which is for it to be a bad investment. That brings you back to saying it's actually got to be the government that does it.
Yeah. Yeah.
And the government isn't going to do it because the NDIS is eating the budget.
Yeah, no, fair enough.
And not just the NDIS, like the budget is in deficit.
Yeah.
Not a huge deficit, but,
I'm a little bit more hopeful. I reckon, I know I've got some questions on productivity later in the show, but I just think if there's one area where you could make the sort of productivity case study, it's housing. Throw everything at it, solve that problem, and then you'll explain to people how productivity works.
What do you mean?
Like, I think if you could find ways to throw everything at the housing sector and to improve productivity. So that infrastructure thing we were talking about, how do we get building faster and better and more efficiently and more cheaply? Modular housing. How do we get planning laws harmonised so it's more productive to get through that? I reckon if you said, productivity is a slippery idea, but let's say we're going to throw everything at housing and build the case for sort of being more productive. I don't know. Maybe I'm being very Pollyanna, aren't I?
No, good for you. I mean, we need a bit of hope. We need hope. Yeah. Ray says, on the eve of the 2013 federal election, Abbott promised no cuts to education, health, ABC, SBS. He not only broke those promises, but many more. The coalition went on to win elections in 2013, 16 and 19. Quite clearly, you can break promises and still win elections. Albanese, as quickly as possible, should bite the bullet and introduce all of the things he really believes are Labor values and in the national interest. Oh, yeah, look, Ray, come on. I mean, it's not going to happen, is it? I mean, really?
Yeah, I mean, Ray makes a good point that he's got 3 years and maybe he's got 6 years with the coalition.
No, there's no maybe about that.
Yeah, okay.
I mean,
there you go.
He's definitely got 6
Well, he's not going to say that out aloud, but he's got 6 years to get some big reforms through. I agree. I don't think those are reforms that you could take, that you could do without a very clear mandate. Ray's talking about negative gearing, franking credits, capital gains, mineral resources tax with teeth. I mean, Ray's right, they are Labor values, but I think you'd need quite a specific mandate for that Albanese hasn't sought and doesn't have, in my view.
Yeah.
Eric says, this week on Q&A, Senator Holly Hughes reminded us at the very end that Labor will go after CGT in the context of the family home and inheritance tax. What are your thoughts on what I feel is an incongruity, because the coalition believes I should be able to succeed in my own right, but I'm also entitled to everything my parents earned? That's nicely put, Eric.
Yes.
I think, again, we've got some questions about the $3 million tax on the tax on super balances over $3 million, the unrealised capital gains. I think there's going to be a shift around the world between taxing labour as demographics go against governments to taxing wealth. So Eric and Holly Hughes are probably right. Eventually, not only Labor will go after those things, but probably a coalition government would have to too, because the tax base is just eroding.
It'll erode more with artificial intelligence too.
Yeah, so, I don't think it's a partisan political thing. I think it's just we're going to see that around the world.
No, I think before we started the podcast here, you mentioned that the tax on super balance is about $3 million is a scalpel approach to wealth.
Yeah.
A wealth
Jim
tax.
Chalmers told us that in their podcast,
and I think that's interesting, and that's true. I mean, it is. It's a wealth tax, but the thing is, it's not actually a tax. It's a slightly higher or slightly less of a tax benefit.
Yeah,
like instead of it being a 15% tax on super, it's 30%. Well, if you're on a 45% or 47% tax rate, 30% still a discount.
Yeah.
Anyway,
look, I mean, I totally get why people are upset with it. Taxing something that hasn't happened yet, it's hard to wrap your head around. It does feel illogical, but I just think step back from it and the sort of strong feelings about it, and you see this shift between taxing labour and wealth. It's going to be drifting more towards
and wealth taxes. Taxing wealth is inherently taxing unrealised gains.
Yeah.
If you're taxing wealth, unless you can't. So taxing wealth involves taxing unrealised gains, basically.
Yeah.
Which means that you're going to have to sell something to pay the tax.
Yes. So I don't think these. I think the fears that people have are well founded, but I think that's the path that demographics is taking us down, and artificial intelligence too.
Stephen says, I want to ask your views about the role of cost-benefit analysis for infrastructure projects. Stephen seems to be in Tasmania, and he's talking about the Macquarie Point Stadium by the Tasmanian Planning Commission presented a cost-benefit analysis of this, and they all agree that the proposal would result in a decline of economic welfare for the state. This is various panels and Nick Gruen. I didn't know he did this. Anyway, what was interesting was that the Commonwealth Government contributed some $50 million towards the rehabilitation of the site back in 2012. Anyway, I mean, so the broad point is, what's the use of cost-benefit analysis? And the answer is, if you do a cost-benefit analysis in business, you look at the cost and then you look at the income from the cost, right? The specific income, and you work out over time, is the net present value of future income from the thing that you're building equal to or greater than the cost of the thing.
Yeah.
Right?
Yeah.
The thing about public infrastructure is, what they do with the cost-benefit analysis of public infrastructure is they bring in all sorts of crap. Don't they? I mean, really, you just make anything up.
Well, I think you might say you take a broader view of the benefits. It's hard. It's hard to make those things. I mean, I take the point. What are they worth? The other the counterfactual is: would you rather they weren't done? I think it's better to have a stab at something that at least lays out the costs. Maybe is woolly on the benefits, as you say, but I'd rather have something done.
I suppose what I'm saying is that the benefit in the cost-benefit analysis of public infrastructure for politicians who are making the decision is mostly about votes.
Yes. Yeah, fair call. Fair call. Yeah. All right, Daniel says he's got a question following up some questions that we had on the First Home Super Saver scheme. It's worth noting, and the investment risk that you might be taking as part of it. It's also, he says, it's also worth noting that if the scheme is only used over 2 financial years with a planned early July exit, contributions can be stacked in late June and early July, effectively nullifying your market exposure. With the contribution caps currently set at 15K, this strategy would yield 60% of the potential benefit to be rendered out of the scheme. Not bad for a quick turnaround. Have at it. Daniel, our financial planner, says, in the current environment with high volatility, a month is a long time. Just consider April 2025. Better to elect that your additional investment go into a cash investment option within the fund, and when you lodge a request to release funds, specify that you want to withdraw from the cash option. This is available in the forms provided by the super fund. 99% of funds would offer these, and those that don't, you probably don't want to be in anyway.
And I think it's worth noting that the whole point about the First Home Super Saver scheme is tax, not investment returns. It's designed to provide first home buyer savers with a bit of a tax benefit in their savings.
Yeah.
So just go for the tax benefit. Like, it isn't about getting a better return, because you're right. The markets are more volatile. So you could just wipe out the entire tax benefit through a bit of market volatility.
Yeah, possibly.
So, just go for put in cash.
Yeah.
That's the point. I mean, and I think that's what I'm saying is Daniel's right.
Yeah.
Ada says, love the podcast. It makes the 3-day commute into the office far more entertaining and not as painful. Ada, surely you're not taking 3 days to get to work.
Maybe 3 days a week. She's listening to us over the
Otherwise,
course of those
she's commuting
3
from
days.
Greenland. Here's a question I've been grappling with. How do we truly revolutionise productivity agenda in Australia? And more importantly, diversify our economy beyond banks, mining and housing? And then she's going on a fair bit.
She's got a few ideas, though.
Yeah. What would you do? Would you overhaul the tax setting, given how ineffective the current R&D tax incentives are at driving real innovation? Do we need to supercharge our startup capital markets so we stop exporting talent and ideas overseas? Should we make AI investments tax deductible or double down on education and skills development? What would it take to really shift the needle, says Ada. Look, good question, Ada. The question is, what is actually causing Australia's low productivity? And the answer, there's a few answers. The main one is the lack of business investment. Australia's capital deepening, or capital stock per labour per person is falling.
Yeah.
So how do you get that going? I don't know.
Yeah, well, all of Ada's suggestions are good. I wonder if it's a bit more sort of fundamental than that. It's to her point. It's not just technology or process. So it's not one idea. It's more of a cultural thing. I reckon we just got to get people interested in the idea. And people hear productivity and they think, Jesus, that means I'm going to be working harder and getting less pay. But that's sort of not the point. The point is that we want to work the same amount or less and get more bang for our buck. Is the way to sell productivity to say, we want to invest now so that your kids and your grandkids are going to enjoy a stronger economy. Is that the way to sell it?
Yes, but I'd also make the point that Paul Krugman has a lot to answer for with his much-quoted statement that productivity isn't everything, but in the long run it's almost everything, right? So that's kind of drives a lot of this idea. And the paragon of productivity in the world is the United States, right?
Yep.
Its productivity has been growing while everyone else's, Europe's, Japan's, Australia's, has been flatlining or going down.
Yeah.
Productivity in America is soaring. It's fantastic. But America's a mess. Right? I mean, America's it's divided. They've put in a questionable character as president. It's terrible. So I'm saying that productivity isn't everything. Just be careful what you wish for.
Yeah. Okay. Yeah.
It's like maybe the cost of productivity, having a high productivity, is not kind of what you want, really.
Maybe.
I'm just saying.
Maybe.
Just raising the possibility.
The other thought I have in response to Ada's question is, do something. Like, what's the last big reform that we've had?
I know.
Do something. Or maybe the idea.
Well,
just get on with doing something.
I've been reading Kerry O'Brien's interviews with Keating about his time in the 80s and 90s. Jeez, it's fantastic. I mean, just the thing that he came into power in March 83 or whatever it is. 18 months later, they went to election again in December 1984. So the first term was 18 months, right? They did far more in 18 months than Albanese looks like he's going to do in 9 years.
Yeah.
Like, it's unbelievable.
Yeah.
First thing he did was float the dollar. Bang! Opened up the financial system.
Yeah.
It was incredible.
Yeah. So maybe it's just do something. Do something. Maybe the order of these things doesn't matter as much as just getting some momentum. I'm going to go to Tom's question. He loves the Money Café and he tunes in every week from London. Thanks, Tom. As a young professional, I'm finding it increasingly difficult to feel like we can bring a lasting competitive advantage to the workplace with AI evolving so quickly. I work in sales here in the UK and have degrees in economics, human biology, and a postgrad certificate in software engineering. God, I'm feeling unqualified. Yet I still feel the need to constantly reskill just to stay relevant. How can Australia, as the wider global workforce, realistically keep up and retain a human edge as AI continues to accelerate? I have no idea, Tom. I've got a 16-year-old at home, and he's getting to that stage of picking uni subjects and what he wants to do in year 12 and all that sort of thing. And we're having these discussions like, what do you think will be smashed by AI and what we don't? And we're absolutely guessing. It's not easy, but it's a real, Tom's in the workforce and living in London and doing okay. I mean, how do you think the next couple of generations of kids are going to feel about this? Now, I've been very Pollyanna, and now I'm getting increasingly concerned about all this. We had the Macquarie conference last week, and Craig Scroggie, who's the CEO of NextDC, he made the point there's a lot of companies in the US, their starting position now when they have a new hire they need to make is, can AI do that job? And make sure that AI, you are absolutely certain that we can't just use AI for that job before we go hire someone. Microsoft this week cut 3% of their workforce, 6,000 people. Lots of it is just coders. So Microsoft has cannibalized itself. They've had this Copilot stuff working, and now 30% of the code inside Microsoft is written by AI. So, imagine 5 years ago, 3 years ago, the hottest job in the world was to be a coder or a software engineer. And now those people are losing their jobs. Like, I know. I just think,
and I keep watching videos of robots.
Yeah, dancing
getting
robots.
better and better at sort of dexterity.
Yeah,
I mean, they are. They're getting better and better.
So I really have no idea. I think, Tom, you're doing all the right things, trying to reskill and relearn and use AI, and creativity will always be valuable, I think. But it is really hard to see how this goes. It's really hard to see where it goes. If AI wiped out, be really conservative, 10% of the workforce, like, how does that change the country? Think of again, we're talking about the erosion of the tax base. What happens there?
But given the amount of money that's being invested in AI, clearly the companies that are doing it believe that AI is going to replace a lot of workers, because that's where the money's going to come from.
Absolutely.
So that's what the whole thing is based on.
Yeah.
Is replacing human beings.
Well, either these companies replace lots of humans, and then we've got the sort of the issue falls on the state, or they don't replace humans, in which case share prices and stock valuations have to go down because AI is really expensive and it'll smash margins.
Yeah.
So either way, it doesn't feel fantastic, does it? I don't know. I just think it's we've spent a lot of time worrying about Trump blowing up the world. Maybe maybe his mates in Silicon Valley are going to do it for us.
We've got time for one more, I think.
Matt's is a good question.
How could so many newspapers have endorsed the coalition last week, especially newspapers that are now stating with authority the ways that Dutton, the Liberal Party, got it terribly wrong? I guess I can maybe understand Seven West Media and the Murdoch Press, but the AFR as well? Are any of them acknowledging that they missed the mark by a really long way, or do they all still think Angus Taylor should be the nation's treasurer? Good point.
I think
defend the AFR's ridiculous.
It's a fair criticism. It's absolutely a fair criticism. But as we just said, like, what would you say the signature achievements of the Albanese government were? What was the economic policy that everybody applauded? I mean, we get lots of questions saying the Albanese government's a disaster. Why is there this tax on unrealised gains in super? What have they done about housing? So I totally get the criticism.
I suppose another point to make, Matt, is that the AFR and others that endorsed the coalition didn't actually say that the coalition would win.
Yes.
They said that you should vote for the coalition for these reasons.
Yes, and I think if you...
And you might disagree with that, but that's a valid opinion, I guess.
Yeah. And Matt, I'd encourage you to read our endorsement. I don't know what the opposite of ringing endorsement is, but it was a very, very quiet one. So yeah, I mean, I think it's totally fair criticism, and we and the polls and the electorate, I would say, misread how well Labor would do, but I don't think that.
What do you mean the electorate? The electorate.
Well, I think
decided.
No, sorry, but I think lots of voters thought it would be really close.
Oh yeah,
yeah. I guess I'm thinking the community thought this was going to be a close election.
It was the opposite of close.
It
was unbelievable.
Unbelievable. And so yeah, I mean, I think Matt's right, but yeah, an endorsement is different to like a
lot of people are saying
a view on the outcome.
A few people are saying that it's a 1944 moment for the Liberal Party, which is when Menzies and others created the Liberal Party out of the United Australia Party, because the Conservative movement under the banner of United Australia was going nowhere, and they had to start again. Possibly they have to start again. I don't know.
Yeah. I mean, it's not easy to do that, is it, in the current? But I guess you might argue the Republicans in America have started again under the same name.
That's true.
Not much of what Trump is. I mean, Trump this week, there's been suggestions of price controls on pharmaceuticals.
It's not more than suggestions.
Yeah,
he's going to control the prices of drugs.
If he can. Let's see if he can get it through the courts. He's endorsing tariffs. He's looking at higher taxes on the rich. I mean, it's not the Republican Party of 2 years ago.
That's true.
So, I mean, I think maybe you can rebrand under the same banner, but yeah, I don't think Australians are loving that sort of hard right direction. But I come back to this AI thing, New World Order. It's going to...
Also climate change.
Yeah, climate change. It's going to exacerbate inequalities, and that makes populism attractive to a lot of people. And populists don't have fixed ideas. They whipsaw around and do whatever feels right. So strap in.
There are a couple of good questions that we didn't get to today, which we'll try to bring next week if we can, depending on what flood of questions comes in between now and then. But thanks everyone for listening and sending in your questions to the Money Café. Thanks again to Daniel Perslow of Bruning Partners in West Leederville in Perth for help with some of those questions.
Absolutely.
I'll be back next week with Stephen Main. So send in your questions and we'll answer them. The email is themoneycafe@eurekareport.com.au. Until then, I'm Alan Kohler, founder of Eureka Report and finance presenter and columnist for the ABC.
And I'm James Thomson, senior Chanticleer columnist at the Australian Financial Review. See you next week.